We wanted to build the greatest mobile phone-based investing platform ever seen, which I happen to think we did. 8 million people have downloaded the Learn app, but in there was the learning library. The problem with an app, or the challenge, is it can't do too much. If you present an app that does too much, it confuses the user. So we bifurcated. We ripped out the learning library and we created a spin-off app called Learn. We worked with Professor David Raska of Northern Kentucky University and Professor Mark Kane of UCD, who's head of learning psychology there, and Professor Barry Smyth of UCD. We worked with some of the greatest experts in learning in the world.
Hi there and welcome to Stock Club, podcast brought to you by MyWallSt. I'm Mike, and joining me in today's episode we have MyWallSt's chief investor Emmet. In this episode we talk about the success of MyWallSt's original shortlist laid out 10 years ago and have some exciting news to follow on from that. To stay updated, all you need to do is sign up to our mailing list on MyWallSt.com, where you'll hear all about our plans for the next 10 years. Today's podcast is brought to you by Vodafone Business. Now, if you're like us here at MyWallSt, you know running a business is difficult. There are countless things to think about, and many often simply get ignored or completely forgotten about. Well, that's where Vodafone Business can help. They've crafted a suite of tools and supports to boost your business's operations, and the best part is it's free for everyone. From cybersecurity to harnessing the power of AI, building a website and improving how your teams work remotely, Vodafone Business will help you address the often overlooked but crucial elements for your business's success. To get started today, check out their one-to-one VHub digital support and advice service. You'll find everything you need right there. Find the link in our show notes or simply Google Vodafone VHub for more details. Now, let's get into the episode. Emmet, how are you doing?
How are you doing, Mike? How are you this week?
I'm good. We're recording this on Wednesday, which I feel is an interesting time, because if Nvidia tomorrow has tonight has a bad earnings report, I feel like the stock market is going to go on fire.
Yeah, that's right. I mean, the entire market is now following Nvidia.
Yeah, Nvidia and super microcomputer, which has gone up like I think it was a 11 bagger in the space of 2023. Yeah. It's fallen this week for the first time, which seems like ever. So the hype around the chips at the minute is it's bubbly. Is that a fair term?
It is. And in fact, there's a hypnotic effect when you see a stock that's gone up 2, 3, 4, 5, 10-fold in the last 12 months, because you're like, I want to hop on that train.
Yeah.
And you're like, hold on a minute, it just keeps going up. And you're looking in the rearview mirror and you're really trying to make a judgment based on that. And it's a very deceptive and intoxicating kind of effect. You're looking at this chart like, should I buy now? What's going to happen? You just have this complete, I suppose it's FOMO of a type. You're like, everybody else got in on this and I didn't, and it's not fair. And you're going to miss a lot of those. And that's just the journey of stock investing. There's no two ways about it. You're going to see hundreds of investments you should have made, when in fact, all you need to do is concentrate on making one or two that you did make and changed your life. And that's really kind of the long-term pursuit.
100%. I think intoxicating is a good way of describing it. But yeah, absolutely. We could sound very foolish now, and Nvidia could blow everyone out of the water and be up 40% again tomorrow and be the same size as Microsoft.
Yeah. With an unhappy founder who wishes he never started the company.
Yeah. Who would be out surfing somewhere, I'd say, if he had his choice.
And just for our listeners' benefit, for those who didn't know, the founder of Nvidia, whose name is kind of slips in my mind at the moment. Yeah, that's it. Went on the record recently and said he wishes he never started the company. When he was asked, I think it was on CNBC, what would you do differently? He said, I just wouldn't start the company. And they said, haha, very funny, but what would you do differently? And he was like, no, I would not start the company. It's been decades of anguish, toil, distress, and pressure. So like when the vision of success is speaking like that, he's not really throwing a rope ladder down to the rest of us who are trying to build something like that.
Yeah, that reminds me, this is a tangent, but I had a mate in New York covered head to toe in tattoos up to the back of his head and everything else. Oh. And I had a friend over and he's kind of a bit of a bumpkin, and he was asking him, what about this one? What about this one? And he just like puts his hand on his arm and he's like, can I give you one bit of advice for the rest of your life? Don't ever get a tattoo.
Really?
Yeah. I'd say he just,
wow.
He was just sick of them at that stage. But anyways,
it's incredible.
More important things at hand, Emmet. It's a big week, month, year celebrating at MyWallSt. We have a birthday.
We do. We're going to be 10 years old very, very soon, Mike, in a matter of weeks.
Yeah. So I'm still waiting for the party invite. I don't know if we're getting a cake or what, but I presume in those 10 years you picked up some interesting stories along the way.
Yeah. We're definitely having a cake. The invite's in the post, Mike. You did make the cut.
Okay, I hope so.
Well, there's been some amazing stories over 10 years. And I think any entrepreneur who starts something, like, incredible events are unavoidable. They just are, because you're in a dinghy. I always think about starting a business. It's like going to ocean in a dinghy, and you know that the giant battleships are out there and they're just going to cruise through the ocean with no trouble, but you've started something and you're rowing into the ocean. But the stories I've built up range from like banal to beyond belief. Really beyond belief. If I told some of the stories that I've built up, people go, no, he's pumping that story up. As you know, you've been on the journey with us for years, Mike, and you know that just stuff happens. But when I think about it in the simplest form, there's two types of entrepreneurial businesses. Companies that are started from the ground up when the entrepreneur has identified an untapped need or opportunity. And then companies that are started from the ground up where the entrepreneur has identified an untapped need or opportunity in an area where they are especially passionate. Now, like all entrepreneurs end up passionate, or most entrepreneurs end up passionate about their business, but it's where you start. Do you start from a place of belief and passion, or do you just start from a place where you see an opportunity and you go after it? And they're not mutually exclusive, but definitely they have different paths. But you have to, like, for example, suspect that somebody who starts a business in plastic carrier bags, for example, comes from the former category. They see an opportunity. And then the person who starts a chain of gyms, for example, that for people who require rehab, is coming from a place where there's probably an experience or a belief, or they've seen something or experienced something and know that this is an untapped need that could change people's lives. And they're equally valid, and they're important routes, of course. But like, for a real example of a passion-based business, there's a guy who started, well, actually, I won't say what he started. Doug Otto started a company in Australia in 1970 because he identified a gap in the market for high quality, durable sandals for surfers. And one of the problems that surfers had there on the beach in Bondi Beach in Australia in the 70s when it got out was their feet were a bit cold. And he was an absolute surfing addict, and he loved footwear. And he wanted to spend his life on the beach and make feet happy. So now 50 years on, or whatever it is, Ugg boots are known everywhere. And that's a great example of a business founded with a passion and an interest in an area that happened to identify that big opportunity.
And not only Ugg boots now, it's the Hokas, those running shoes.
Teva is theirs, isn't it?
Yeah, they have some very interesting. Sorry, the company we're talking about is Deckers, by the way, and it's
Deckers Outdoor, correct?
It's one of those really kind of succinct, surprising success stories, we say. Like, just looking at Uggs alone, Uggs is a ridiculous business.
And it's ticker's deck. And I was a shareholder years and years and years and years ago. And like, so all my worst decisions were sales. Like, I was a shareholder in Lululemon, I'd say about 3 weeks after it floated, and it was something similar with Deckers Outdoor. And anyway, look, that's another. I'll moan about all my mistakes on another podcast again. But anyway, MyWallSt. Getting back to MyWallSt, it was founded, as most of our listeners know, by John Tyrrell and myself, with no more than a burning passion for stock investing and the uplifting power of education. And like everyone in John's life is and was a teacher to this day. And despite being an engineer himself, education is something that he's lived and loved and observed from the minute he was born, really. And when, on the other hand, I had up to that point when we started MyWallSt, spent more or less every day for probably 16 or 17 years looking at the stock market and investing, despite having studied the physical sciences. So he was an engineer and I was a physicist, but like he was into education and I was into stock investing, and we identified in each other very complementary strengths. John is an incredible propensity for detail, and I would have brought to the table kind of, I suppose, a big picture. So I was keen on getting the world investing successfully, and John was very much strong and is to this day strong in figuring out what we need to do to get there, and lots of other complementary strengths. So we started 10 years ago with a mission to get the world investing successfully.
Yeah, and you touched on education there. I think the Learn app is a great example of that. And when we talk about the world investing successfully, like how far that's reached since its inception.
Yeah, it's amazing because when you build a business like ours, you put a lot of different products into the market, and people will tell you what's valued. The world will tell you what's valued. And I think a lot of, for example, app designers will say, look, we don't really need to work too hard on identifying the features that matter the most, because the features that are used are the ones that people want. Which reminds me of the Twitter story, and to just completely butcher the story, it was founded Jack Dorsey and crew, and they couldn't make it work, and they just left it alone and abandoned ship. And one day, one of the guys, probably Jack Dorsey, went in to decommission and switch off all the servers, only to notice that the messaging portion of the Twitter web application was growing faster and faster and faster, and that was the birth of Twitter. And to, I suppose, slightly analogous, is we built this Learn app that you mentioned, and well, actually, our very, very first app had everything squashed in there. We wanted to build the greatest mobile phone-based investing platform ever seen, which I happen to think we did, and I'll come back to that. But in there was the learning library. But the problem with an app, or the challenge, is it can't do too much. If you present an app that does too much, it confuses the user. So we bifurcated. We ripped out the learning library and we created a spin-off app called Learn. And there's so many different parts of the story. We worked with Professor David Raska of Northern Kentucky University, and Professor Mark Kane of UCD, who's head of learning psychology there, and Professor Barry Smyth of UCD. We worked with some of the greatest experts in learning in the world to make sure we delivered something that just got people to invest. Because a bit like Duolingo kind of breadcrumbs you along with all these, keep your streak and just do this and just do that, and brings people through the much longer journey of learning a new language when compared to learning how to invest in the stock market. But we built this app. We put it out there. We never asked for people to pay a penny for it. Actually, that's not quite true. I'll come back to that. But to this day now, 8 million people have downloaded the Learn app. Not on the same day, it has to be said, not even in the same month. But it's something we're very proud of, and it's a wonderful product. It has hundreds of thousands of reviews that altogether rank at 4.9 out of 5, and that's something we're very, very proud of. When you add up all the different app stores, and they're all partitioned, and all the reviews online and in the different app stores across iOS and Android, it's a loved product, and downloaded in the thousands every month, as you well know, to this very day. Did I ever tell you the story about Michelle on Stock Club about Learn?
I definitely not on Stock Club anyways, if you want to.
Well, okay, so let me give you that story. About 8 years ago, John, my co-founder, got an email from a young woman in the Philippines called Michelle, and she just sent an email to him to thank him, if you please, for the for the Learn app, because she came from a very, very low socioeconomic background. The only place where she could use Wi-Fi was on the bus, which is unusual if you understand telecoms. But they had a free Wi-Fi hotspot on the bus, and she got a free phone from a charitable organization, and she found her app, she downloaded it, and she consumed the whole of the Learn app to the very end, which is quite an amount of content. It's like a small book, but it's appified in a way that you just keep going. You don't realize how far into it you've gone. So she consumed the entire Learn app, and she opened a stock brokerage account and deposited $5 and made her first stock investment. And she was the first person she ever heard of, or ever knew, who invested, or she had never heard of anyone who had invested in the stock market, or in anything for that matter. And she kind of explained it in a way to John, where the two of us were sat beside each other reading this email, and like we just quietly read it, the way she expressed herself and the way she expressed her thanks. And we just kind of looked at each other, and it's one of my favorite moments in my Wall Street's history. It was a total goosebumps moment for us, that we knew something we did had changed, the financial outcome of somebody, like, or changed the financial understanding of somebody. It was complete, as I said, complete goosebumps moment for us. And there's many more stories. I mean, there's not too many stories about the Learn app, but I tell you another one. One of the things, and it kind of leans into our now retired Invest app, is that nothing beats free in the world of apps. And for a while, when we were getting about 60,000 downloads of Learn a month. And we were like, something, we have a full pride and an empty pocket. This business is spending money like a steam train, shoveling cash into the engine. It just was a very, very expensive business to run. Business consumer is notoriously expensive. So we said, let's just charge $1 for this app. 60,000 people love it. We charged $1 for that app, and the downloads fell from 60,000 a month to 3,000. 95% drop off when you ask for $1. In what Apple said was the most loved investing education app in the world. Yeah. So we lost 95% for $1. So we removed it. We got rid of the dollar because we thought, look, there's no point in standing in the way for the sake of like $3,000 a month. It's just, it's not going to fulfill our mission. I mean, we wrote a crazy BHAG, which was to create 1 billion successful new investors, which I know is crackers. Like, I do know that that's crack, but a BHAG is generally crackers. A big, hairy, audacious goal is generally crackers. And it's meant to express something that's might happen 100 years after you're dead. So like, our BHAG is to create 1 billion successful investors. And we have made decisions that in the moment look insane, but we are focused on the very, very long-term horizon for stock investors. We only talk about the long-term and think about the long-term, and that relieves us from the stress of day-to-day news, which makes for a good conversation. And we jump on the mic here every week, Mike, and we have a good chat about the news. But in reality, the greatest investors, when they bought Lululemon a few weeks after it went to IPO, sat on it. For those who bought Deckers Outdoors in 1997, June 97, sat on them. And that's but anyway, that's kind of in our DNA, the long term. Yeah. Long-term investing, and that was one of my favorite stories.
Absolutely, and it's almost counterintuitive, isn't it? Like, the more you keep up with news and podcasts and investing content and all the rest, it almost could deteriorate your investing skill because it gives you excuses to sell. When, if you still believe in the company, just set it and forget it, the coffee can portfolio. But let's dive into the Invest app, or Invest 1.0, because it's gone through how many different iterations since then. And probably the most important part of it was this short list of stocks.
And you're right. I mean, so for some of our long-term listeners and customers will remember this product. And it was really, really beautiful. And some of the most famous people in the world downloaded it. But I always feel a bit like in the Catholic religion, a priest isn't meant to talk about what they heard. Similarly, you're not meant to really say who was your customer, but I was knocked sideways, starstruck with some of the people who downloaded it and became customers and opened a brokerage account. And so brokerage, what we did with that product was mixed oil and water up until that point, putting brokerage capabilities beside stock market advice was something that hadn't been done. And so we brought together into one place state-of-the-art brokerage capabilities completely free of charge, and layered on top, as you said, this short list of stocks that we identified as great long-term investments. And it was actually that part that, as you said, was actually the product that most changed lives. And as it happens, as I mentioned with the Learn app, everybody's moved away from paying apps. We just, like 99% of our users, the apps that they use 99% of the time are completely free of charge. We just don't do it anymore. People don't pay for apps. And that was the rock that product Invest 1.0 punished on. It was a wildly expensive product to build and maintain. When you're carrying the cost of people's brokerage activities on your shoulders as a business, it's a fast track to disaster. But what really, really, when we look through the last 10 years at the things we did well and things we didn't do so well, that first list of 36 stocks was 10 years ago that we published undoubtedly change lives.
Absolutely. So let's dive into them a bit. You have the stats up there, do you, of kind of the performance?
You're right, because yeah, and I mean those original 36 stocks. Well, I was going to say, as you remember, you wouldn't remember. We researched these to the nth degree, and there was the royal we. It was me, and I had bought them with the family and with my family's savings, and we still have a dashboard here, and so there was 36 in the first invest 1.0, our first product out the door, of which since six of the 36 have been acquired, and therefore not publicly traded, and 4 of those 6 were acquired at quite a premium. But when I look at how they are right now, this minute, 16 of the initial 30 doubled in value, which is known as two baggers. 12 of the initial 30 increased by over 200%. Okay, so well over a third were three baggers. They multiplied their money by threefold. 11 of the initial 30 increased fourfold, known as four baggers. 9 of the initial 30, so if I may say, 1/3 of the initial 30 increased by 400%, which is known as five baggers, because they increased fivefold in value. And 2 of the initial 30 increased by over 900%, which is the key number, because that's a 10 bagger. Your money is multiplied by tenfold when the stock is up 900%. And that, I believe, is the most powerful and exclusively successful shortlist of stocks that I can ever find published out there.
Absolutely. And what I find really interesting, and it kind of builds on this ethos of a stock picker, is you have one 10 bagger out of, well, you have two 10 baggers, we'll say, out of a group of 30. You know, to lose money, you'd have to have, you couldn't lose money, is what I'm saying, is in the sense that you'd have to have 10 stocks go to a complete zero, and they would only make up for one 10 bagger would cancel all that out.
That's right. Well, actually, so if you were to put €1,000 into all 36, sorry, €100 into all 36, right now today, that folio is up a total of 312%. So that's a pretty good day out, to be honest, or a good decade out.
Yeah, and that's what I mean. When you invest, the most you can lose is your original investment. But
exactly. It's
completely
not a two-sided.
What you can gain.
This is true. Correct. There's no ceiling. There's no limit on the upside. The limit on the downside is what you invested, and that's why we avoid options. We won't go there, but you're absolutely right. It's not. It's a. It's not a. It's a. What do we call it? It's an asymmetric bet.
Asymmetrical bet. Yeah.
Asymmetrical bet. Yeah, exactly. So you have 100% potential down and no limit on the potential up.
Okay, I'm going to ask you what your favorite pick of the bunch is, but first, it's your last chance to enter the Vodafone Business competition, which is bringing your business to the big screen. So Vodafone is partners with the Irish Rugby team, and they're giving their Vodafone Business customers the exclusive opportunity to be featured on the LED screens in the Aviva Stadium during the Ireland versus Scotland match on the 16th of March. This competition also includes tickets for you to come along and enjoy the match, so it's worth entering for that alone. I think if you're a business owner or know someone who loves this opportunity, the link to enter is in our show notes, and entries close on the 23rd of February, which is tomorrow. So your last chance to get in. Okay, so Emmet, out of that group of 30 stocks, you said 6 were acquired. Give me your favorite.
Okay, well, for our listeners' pleasure, I'm just going to rattle through some of the names, not all of them. There was Disney, which since we published is up only 29% to my surprise. Coca-Cola is up 40%. Starbucks up 138%. Nice. The big winners are like Microsoft, which has been a 10-bagger, MasterCard a 6-bagger, Berkshire, a 3-bagger. The biggest winner was Tesla, and you might go, Tesla, come on, give me a break. But I can tell you 10 years ago, not many people were thinking about investing in Tesla. That's been an absolute face melter of an investment. Some of the ones that didn't go great, I was surprised at Ford. 10 years later, Ford is down 28.53% on our dash. And that's, I suppose, no surprise to those who follow the motor industry's trials and tribulations. And probably when you put it right beside the fact that Tesla's up 1,151% since we advised people buy it. You can kind of see it's the tail of the motor industry. Tapestry is up 34%. What's Tapestry?
You tell me, man.
Hold on a minute. No, that's a business that's been renamed. Oh God, can you believe? And then Intuit is a very interesting example of a real dull, boring business that is as relevant today as it's ever been, and it has products like QuickBooks and makes accountancy fun for business owners.
I think it's one of the top lobbyists in Washington as well. Intuit.
Is that a fact?
Yeah.
How did you know that, Mike? That's quite interesting.
Yeah, because they're, I suppose, capitalizing on.
You follow lobby. You have a lobby.
They're capitalizing on quite an antiquated system in terms of the self-filing tax system in America. So.
Yeah. Bring it on. So anyway, what's just my favorite? So it's no easy call because this list is now 10 years old and a lot of these businesses have matured, and I know what type of investor I am, but I'd go for Netflix. We can dive into like hyper recent news with Netflix and say, and I like it because they added 13 million subscribers in the fourth quarter. Our revenue rose 12.5%, blah, 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 blah. But we need to stand back when we look at investment and ask a simple question, which is, in 10 years from now, will this business be far bigger, a bit bigger, the same, or smaller? That's pretty just four directions, and a bit bigger is good enough for a lot of people. And I would propose that for early stage investors, it's easier to pick a list of businesses that are likely to be a bit bigger, and they should stick those at the bedrock of their portfolio. But I am a huge fan of Netflix, and anyone who's ever bet against its founder Reed Hastings or its current CEO Ted Sarandos, they got it wrong. Like, there's always been a bet. Like Disney Plus, Miars, Prime, Miars, YouTube is a good one. I'll give it that. But Netflix is the kingpin. Like, it is the kingpin, and I think if you started to pare down all of your subscriptions, I feel that Netflix and the visuals is analogous to your subscription with Spotify. It stays at the core of your entertainment, and those other ones are a little more discretionary. I got an email the other day from Disney Plus saying, hey, guess what? Good news, we're hiking our prices 100 to 120 euro in March. And I was like, me arse, I'm going to cancel that. Until one of my family objected, of course, because it's not a functioning family until you've subscribed to everything going and you're broke.
Yeah.
But anyway,
it's
so
democracy on cancelling as well.
Yeah, anyway, so that's it. I'd pick Netflix from that list of 30 that still survive. What about you?
I don't know if it's my favorite stock, but I think the one with maybe the most interesting story might be Chipotle down there at the bottom. So up about fourfold since picked in 2015, and
up 330.73% to be exact, folks. Yeah. But there you have it. Let's not get too deep.
But when I talk about Chipotle, I always go back to the conversation we had last November with Bill Mann. And he basically said the problem with modeling and discounted cash flows and all the rest is that if you brought DCF that said Chipotle would grow free cash flow at 20% for the next 20 years, you get laughed out of every investing house on Wall Street.
Yeah.
And yet it did. And I think that's why individual investors have this advantage, is because you look at Chipotle and say, sell burritos, they're tasty, whatever. They went through an E. coli scare. The stock absolutely plummeted. Yeah. And yet it bounced back. And like, if you have the stomach, and that's an appropriate term, if you have the stomach strong enough for it and just held through all of this and didn't worry about it and just say, oh yeah, Chipotle, this sure, why would I sell that? I have no need to sell. You'd be sitting on huge, huge gains. And it's really an example of why individual investors have advantages over institutional investors.
And you're dead right, because the one thing that list that we first published did is it just exists. We can now look at it and go, well, what has 10 years done to this list?
It doesn't tell any of the story in between. Is the big one.
That's the thing. This is almost circling back to the opener, where like news is a distraction because we're intelligent creatures and we're trying to assimilate what we just heard. And it's like, oh, I can't believe that. Like Jack in the Box. Do you know the food place Jack in the Box? I've never been to a Jack in the Box, but Jack in the Box, a couple of its customers died.
Really?
Or diners, I should say,
Jesus.
died, as far as I know. Terms and conditions apply, folks. What I'm saying might not be 100%, but do check Google. I'm 90% certain that a handful of Jack in the Box customers died from a very, very bad dose of E. coli or food poisoning or whatever it is. And, people still went, well, you can't beat a good Jack in the Box burger. They're pretty delicious. Does Jack in the Box do burgers? I don't even know what they do.
Yeah, I think
But I
they're
do
like
know
kind
what
of,
they did.
Wendy's, McDonald's kind of vibe.
Right. So, I mean, food chains, every type of business has hazards. I mean, food safety and nutrition is obviously top of the pile for food places. But you're right, Chipotle it's had serious speed bumps, and its founder, Steve Ells, he was a great founder. He was a really well-regarded chef and had a nice style on television, but I think a bit like founding CEOs, they don't necessarily always make for the long term to be the media person. And I think for whatever reason, Steve Ells was just kind of better off kept in the labs to make nice food. And Chipotle is a wonderful business. It was a very original concept when it IPO'd. I remember I've been an investor since then till today, as it happens.
Helps.
And I kind of, and it's kind of like the production line, the concept, if you're describing it to someone from Ireland, because frankly, they're not even here yet, it's a bit like Subway, but with Mexican food. I guess you can argue nicer premises.
They're not here, but if you've ever been to a Chipotle in a Tolteca, you'd be ringing trademark offices that they must have copied every.
This is true. Even on the same color, and the logo is very similar and all the rest. But so look, Chipotle, I agree. I think it's a fabulous business, and I still think to this day it's a fabulous investment is it going to survive for the next 20 years? Probably. Is it going, so it's back to our question, is it going to be way bigger, a bit bigger, flatter down? I'd say it's going to be a bit bigger.
Yeah.
What would you say?
Yeah, I'd have to agree. I can't see it slowing down. I suppose valuation compression could come into it, but again, not a huge concern. But I like...
Look, the greenfield opportunity in Ireland. There's a lot of people who are waiting for a Chipotle burrito over here.
Yeah. I like how this just turned into a bit of a humble brag about your portfolio as well, where you're talking about your Netflix investments.
Oh, man. If you want
Chipotle's inside
my humble brag is I sold Mercado Libre. I took $6,000 off the table. It's now worth about €600,000. The stock that I sold. Lululemon took about $3,700 off the table. It's now probably worth well over $100,000. I am the king of selling I used to be the king of selling too soon. Now I'm the king of saying, buy it, set it, forget it. Yeah. I've learned. And too many times, I'm a slow learner, the don't sell lesson has beaten me up over and over and over. And when I mine through every single investment I've made over 26 years of online trading, I can tell you that the majority of best decisions and biggest mistakes were in the first 10 years, because the best decisions were the ones I didn't sell and the biggest mistakes were the ones I did. And that's why we say to our listeners, and we say to the world, buy a basket of businesses that you believe to be quality today. And if there's news tomorrow that says, ABC Corp has accidentally killed 15 of its customers and it has a new competitor in Apple and don't let the news drag you down.
Well,
it might be relevant, it might be correct.
Overreact either. If they start murdering their customers, it might be an adverse event.
I guess I'm exaggerating. You're right. No, I'm exaggerating for emphasis. What I'm saying is that the news should, on a day in your investment life, buy a basket of quality businesses. Some will work out, some will not work out, but it will often surprise you the ones that did work out, because when you sell, you're like, you've lost all faith. You're like, this crock of what is just no use. It's going nowhere. But just abstract yourself or remove yourself from the daily stream of news. You turn on, it's CNBC. It's streaming 24/7, 365. You will get news handed to you on your lap of something you bought last week. Always, and that's a very distracting effect, because, as I said, we're intelligent creatures that need and want to assimilate what we just heard into an action.
Yeah, absolutely. So with that attitude in mind, and I think what a lot of people come to this show for is we've seen that success in the last 10 years, and you've enjoyed a lot of it in your own personal portfolio. So looking for the next 10 years, what stocks from the 6,000 or so that are listed in America should we buy and hold now, and eschew this attitude of let my timeline be my advantage, I suppose?
Well, as you know, the two of us plus several other analysts have been working very, very hard to recreate what we did 36 years ago, 10 years ago with 36 stocks. And I suppose the answer to that question, Mike, is going to be shot from a cannon out of the My Wall Street offices next Tuesday, which is February 26th. And it is a pivotal milestone from My Wall Street's journey. And I know this list of 10 is something we'll be talking about on Stock Club in 2034. If podcasts are still a thing, if Mike and Emmet are still a thing, we will be talking about this 10 in 10 years. And so we have shortlisted 10 stocks for 10 years, as you well know. And there's been so much debate and research just to select 10. And I think what we're looking at now is a really tight shortlist of companies, all of which can be bought with more or less any stockbroker, all of which I think will increase in value over the next decade, almost all of which I think will be known to everyone, with probably two exceptions. People go, what's this? And I think those two have some giant, huge growth ahead of them. So those kind of new names, to me, look like Tesla did to us 10 years ago. And I don't want to call them moonshots because they're well-established, profitable businesses growing like crazy, but they're not, if you went to your granny and said, hey, have you heard of ABC Corp? She would say, no, never heard of that, but she will have heard of the other ones. Anyway, look, at that time, when we picked our first list of stocks, Tesla was only kind of known to a percentage of Americans, and now it's known by everybody across the world. What we're trying to do is find a few of those into this list for our first list of 10. So, what was the question? Mm-hmm. Oh yeah, the answer. The answer was just put your email into MyWallSt.com because you will get access to the answer to that question by doing so.
All right, we'll finish on that one. So thanks everyone for listening, and if you want more information, just stick your email in on MyWallSt.com. Emmet, thank you very much for joining me as always. Remember, if you have any questions you'd like answered or elevated pitches you'd like to tackle, make sure to get in touch on Twitter at MyWallStreetHQ or TikTok at MyWallStreet, or somebody just email us at pod@MyWallStreet.com. If you're new to the show, make sure to tell your friends about us, leave us a review on whatever podcast platform you listen to us on, and that's it. We'll talk to you next week. Podcast is brought to you by Vodafone Business. Now, if you're like us here at My Wall Street, you know running a business is difficult. There are countless things to think about, and many often simply get ignored or completely forgotten about. Well, that's where Vodafone Business can help. They've crafted a suite of tools and supports to boost your business's operations, and the best part is it's free for everyone. From cybersecurity to harnessing the power of AI, building a website and improving how your teams work remotely, Vodafone Business will help you address the often overlooked but crucial elements for your business's success. To get started today, check out their one-to-one VHub digital support and advice service. You'll find everything you need right there. Find the link in our show notes or simply Google Vodafone VHub for more details.